Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian stocks and the euro gain after Presidents Trump and Putin agree talks to end the war in Ukraine. Sources tell us European officials were not warned about the phone call. Powell warns Congress there's still more work to do to bring down US inflation after core consumer prices saw the biggest monthly increase since March. We'll get jobs and PPI data later today. Plus, Japanese media report Honda and Nissan are to scrap tie-up talks as both car makers report results. We'll bring you earnings from Europe, including Siemens, Commerzbank and Nestle. Well, a very good morning. Welcome to the programme, and we kick off with breaking earnings from Siemens, engineering, not energy. First quarter industrial business profit coming in at 2.52 billion euros. The estimate was for 2.43 billion euros, so a beat there. And we can go straight to an interview with the Siemens CEO, Roland Busch, who's been speaking to our very own Oliver Crook.
We had a very strong, promising start into our Q1. Growth was up 3%, driven by Siemens Healthineers, by smart infrastructure and Siemens Mobility with 6%, 8% and 10% growth. Digital industry hold us still back, but on the other side, we saw an order intake growth in digital industries by 6%, and also our automation business in order intake was up 6%. So that's very promising that we get more momentum in our automation business in particular going forward. Free cash flow and net income was up 50%. So we had a very strong start. We keep our guidance for the full fiscal year. So therefore, we are quite happy. To your point, yes, smart infrastructure, electrification business has still growth. It's not only data centers, it's the whole sector which is growing. And for automation, we see signs of recovery. You remember we had a high stock which we're building down. We're coming from 14 weeks. Now we are down to 9.5. So we are bottoming out here anytime soon. Therefore, momentum is coming. We see increase in the demand from semiconductors, electronics, aerospace. Also chemical is picking up, which is a leading indicator. So we are quite positive that this comes. But we have to look for another quarter before really having a clearer sign. But it's moving in the right direction.
Yeah. So that was the Siemens CEO, Roland Busch, speaking to Oliver Crook earlier. And we can stay in Germany because we have more earnings, this time out of Commerzbank, just crossing the terminal as well. Really needing to pull out all the stops here to fend off UniCredit's unwelcome takeover bid, of course. So they're announcing a plan to substantially lift profitability over the coming years. They say this year profits are expected to decline, though, to 2.4 billion euros because of restructuring costs, which is going to involve cutting about 3,900 roles. Now, we reported that earlier in the week, of course. European banks having to contend with the pressure of ECB rate cuts. But you are looking at the latest earnings from Commerzbank, net profit of 2.4 billion euros for 2025. So we're going to be speaking to the CEO, Bettina Orlopp, who's going to be joining the opening trade just after 7 a.m. London time. We also have earnings out of Nestle in Switzerland, the world's biggest food maker, of course. The backdrop, higher coffee and cocoa costs. And Nestle saying that it sees 2025 underlying trading operating margin here at least 16%. So they're pricing in for full year 1.5% growth. That's more than the estimate of 1.33%. They had already secured 300 million francs of savings for the year, and you're looking at organic revenue of 2.2% growth, up from an estimate of 2.04%, so a beat there. So there are some of the first earnings that we're getting in this hour, but we could check in now on the broader markets as it is a very, very busy day for earnings and geopolitics. We've got futures pointing higher on both sides of the Atlantic. As I say, the US and Russia talking, and those talks spurring expectations for an end to the war in Ukraine. Asian markets also looking past that hotter than expected US CPI CPI print. Traders really focusing here on the prospect of peace and as well the momentum in China tech. So the MSCI Asia Pacific Index up 1.3%. And if we flip the board over to the cross-asset picture, you can see the dollar really has been on a roller coaster ride in the past 24 hours, jumping off that CPI print on these bets of higher rates for longer. And Powell saying that the Fed needs to do more to tame inflation. But then the dollar pairing gains yesterday afternoon. And you can see euro dollar now at a 104 handle. Again, boosted by the prospect of peace. Cable at 124 ahead of this UK GDP print at the top of the hour. 10-year Treasury yields at 4.6% and Brent at $74 a barrel. So down partly because of the Trump-Putin talks. They could possibly ease some of these supply concerns. So we really are not short of catalysts this morning, and we can dive into one of them now. President Trump saying that he's agreed in a phone call with the Russian leader Vladimir Putin to start negotiating an end to the war in Ukraine. It reverses 3 years of US policy on the conflict, with European officials getting no advance warning of this call. Trump says meetings with the Russian president are now being planned.
I'll be dealing with President Putin largely on the phone, and we ultimately expect to meet. In fact, we expect that he'll come here and I'll go there, and we're going to meet also probably in Saudi Arabia. The first time we'll meet in Saudi Arabia, see if we can get something done. But we want to end that war. That war is a disaster.
Let's get more now from Henry Meyer, Bloomberg's senior Russia reporter. Good morning, Henry. Just give us more of a readout of this call between the two leaders, because a bit of a divergence between what they say was said.
Right. I mean, this is obviously a key moment in Trump's efforts to try and end the war in Ukraine. This was one of his main campaign promises that he made in advance of his election. And we know that there has been contact between Putin and Trump prior to this call. But this is obviously going to be, the start of the negotiations, the official start of negotiations. Trump and Putin have ordered senior officials to start conducting those talks. And, one of them on the American side is Steve Witkoff. This is a close ally of Trump, who, as we know, flew to Russia on Tuesday to secure the freedom of a U.S. Citizen who was held in Russia. And, that is an important inclusion. I think this is someone who has shown in the Middle East. That's his main brief is to be Trump's Middle East envoy. But over Russia now, he's also going to be involved in trying to end the war. And I think the next steps we'll see is, as President Trump mentioned, they are trying to put a meeting together in Saudi Arabia, which would be, a summit between U.S. and Russia. Of course, they have a lot of groundwork to cover before then to try and reach some kind of an agreement before that happens.
And it seems pretty fundamental that Trump called Putin before Zelensky. You mentioned the next steps. How fast is this going to move, Henry?
Well, I mean, the Trump administration has set a very ambitious goal of finding an agreement within 100 days of the U.S. administration, this new U.S. administration. Personally, that is very ambitious. But he clearly is in a hurry. Trump, he's threatening to impose sanctions on Russia if Putin doesn't come to a deal soon. But there are some very, very thorny issues. I would say the hardest one is the security guarantees that are going to have to be offered to Ukraine if it's going to sign up to a deal, which we expect will involve surrendering control of territory that Russia currently holds. This is a difficult decision for Ukraine, and it's going to want to have some fairly strong guarantees that if Russia attacks again, that it will be protected.
OK, Henry Meyer with the latest on those talks, Bloomberg's senior Russia reporter. We thank you. Now, meanwhile, in Ukraine, US Treasury Secretary Scott Bessent presented an economic partnership agreement to President Zelensky during his visit to Kyiv. Now, the agreement is seen as a way to ensure continued US support. But let's get more now from Bloomberg's Kriti Gupta. Kriti, just break this down for us. We've had Treasury Secretary Scott Bessent presenting this agreement, but what's actually in it? What's been the Ukrainian response?
Well, I think let's start with the context here, because this is really coming in the backdrop of years of aid and military aid coming from the U.S. administration under Joe Biden to the Ukrainian people in that war effort against Russia. This is also inclusive of loan forgiveness that Joe Biden had really tried to push through in his last days in office as well. These are all things that the Trump administration is very much against. And this is where the economic partnership is very crucial here, because not only do they want to end the wars to really stop that extra aid and the extra funding that's going from U.S. taxpayers to Ukraine, they also want to get in on some of the critical minerals. Remember, Trump is known as being a very transactional leader here. He's really talking about where can he get these resources to really build that manufacturing kind of growth in the United States that he's seeking. Ukraine actually does offer value there, especially when it comes to likes of critical minerals. And that's the kind of economic partnership that Scott Bessent is eyeing, especially when he makes his move in Kyiv today as well. Other pieces of that include kind of some sort of investment scheme. We don't know the details of that just yet, but that reconstruction narrative is certainly one that's showing up in exchange for really trade.
Yeah, and talking of trade, the EU trade chief, Maros Sefcovic, talking to Trump's team about finding some sort of solution when it comes to tariffs.
Yeah, it's a really interesting one because we know that the EU has kind of been bracing for what comes next from Donald Trump specifically. The issue that you start to see here is what can they offer in return? Now, LNG was a big piece of that. Natural gas was a big piece of that. Okay, we'll hold off on the steel tariffs. We'll buy more natural gas. But they're knocking on a door that is swung wide open here because not only does Europe need those commodities, but the U.S. is willing to export them. So those next levers are really crucial. Tech regulation has played a key piece in this as well. How can regulation or less regulation in Europe offset perhaps some of the kind of carrot versus stick approach that's coming out of the United States? Those conversations are ramping up, especially as some of that NATO defense funding is starting to get pulled out of the states as well. So these are all the kind of things that are being talking about in terms of the European response to the U.S.
OK, Kriti Gupta, Bloomberg's opening trade anchor. We thank you. Kriti will be back with you in just under an hour's time with more on all of these stories. But I just want to check in on the currency reaction to these Trump-Putin talks, because it is moving the euro and the yuan, both initially really jumping on the call and the prospect of peace. China offering to play peacemaker role, according to a Wall Street Journal report. But really, in the case of the yuan, remember, this is exactly the sort of knee-jerk reaction that can unravel quickly, given the fundamentals don't necessarily support a stronger renminbi, especially after that hot US CPI print puts the chance of more than one Fed cut this year in doubt. A point well made on the MLive blog, but we keep across the currency moves. Coming in on the terminal as well, we have the news that Alibaba shares have extended their gains to 9.1% over in Hong Kong, the highest since 2022. And this surge, of course, boosted by this frenzy over Chinese AI, really turning Alibaba into an investor favorite again and injecting new life into the e-commerce giant when really it had sunk into obscurity after that years-long regulatory crackdown. So an exciting moment for Alibaba over in Hong Kong, now up 8.8%. So we keep an eye on those shares, but let's update you on what else we have coming up in this busy day ahead. At the top of the hour, we're going to get UK GDP numbers from the Office for National Statistics, a 0.1% drop expected, so not what Chancellor Rachel Reeves would like, ideally, given that her top mission is economic growth. But then at 1:30 p.m. London time, we'll get more data on the US. Jobless claims data expected to hover around historically low levels. 5 p.m. then, London time, Europe's turn, ECB Speaker Nagel. And this really in the context of both the ECB debate on where rates should settle, neutral rates, and the German election, given that he is the Bundesbank president as well. So lots coming up, and you can get a roundup of those stories and all you need to know by going to the Daybreak newsletter, DAYB Go, on the terminal if you are a subscriber. But coming up on the show, traders shifting their bets for a Fed rate cut from September to December. We'll have more on that hot US CPI report and Fed Chair Jay Powell's Congress hearing coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's go to US macro now. Inflation picking up broadly last month, further undercutting chances of multiple Fed cuts this year. Fed Chair Jay Powell says the central bank has made substantial progress toward taming inflation, but there's still more work to do.
we're close but not there on inflation. We've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now. Research over many, many years in many, many jurisdictions shows that some degree of independence is very important in keeping inflation under control. Hindsight suggests that it would have been good if we had tightened earlier. I don't know how much difference that would have made. Since you'd no longer be borrowing on the credit of the United States, in other words, so Fannie and Freddie would be privately funded, it could lead to that. But there wouldn't be any federal agency that can examine banks above $10 billion. I'm not sure we know what the end game really is here.
So that was Fed Chair Jerome Powell on the inflation status. But let's get more from Bloomberg's Valerie Teitel. What else did he have to say, Val?
Lizzie, he said some pretty interesting comments when it comes to the functioning of the Treasury market. He's backing looser bank capital rules in order to aid liquidity in the Treasury market, saying we need to work on the Treasury market structure. Part of that can be reducing the supplemental leverage ratio known as the SLR. That would help banks hold more Treasuries on their balance sheet without being punished in their leverage ratios for that. We saw a jump in swap spreads on this, meaning there's more demand for cash treasuries as banks will be able to hold more of them on their balance sheet. However, a lot of the Treasury market reaction yesterday was due to that hot CPI print. Lizzie, if we take a look at the core CPI month-on-month figure, a 0.4%, that is the hottest reading we've had in this reading since March last year. The first 0.4 we've gotten since then. That has tempted the market to push out expectations for a Fed rate cut all the way until December, Lizzie. So we could have a Fed on hold for much of this year. Now, Bloomberg Economics has noted that this jump in inflation has been due to other things, seasonal factors, for instance. This has been the third January in a row, actually, Lizzie, that we've had a hot CPI print. But again, there was a lot of pain in the Treasury market yesterday. If we flip on and just take a look, there was a near 9 basis point rise in the 10-year yield as market expects now the Fed to be on pause until December.
OK, Bloomberg's Valerie Teitel with the choppy session post that CPI print and Powell's comments. But we've got plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:22 a.m. in London, and it is a busy morning for earnings. Just to recap, we've already had Siemens results, revenue rising on demand for electrification products, posting higher net profit and backing their outlook. And our very own Oliver Crook has been sitting down with the Siemens CEO, Roland Busch, and take a listen to what he had to say.
We saw this growth also in the last quarters of the last year. This is particular growth driven by smart infrastructure. Smart infrastructure has a very, very strong foothold in the United States. Is it in building technology, any kind of equipment, solutions and services, but also electrification? Remember, we invested also in our capacity in the United States for electrification. So it's medium voltage, low voltage products, but also any kind of products which go into data centers, fire safety, security, building automation. So we see a strong pull there. Software, this business sits in the United States. This is growing. It grew again strongly by 15%. So therefore, we have a strong software business. Remember, we also have our acquisition with Altair, invested 10 billion into Altair. This, we expect the closing in the second half of the year. So therefore, this is a growth momentum which comes, and we are there at the right time with a very strong footprint, 40,000 people in the United States. It's 25% of our revenue coming from there. So that should really give us a lot of momentum also in the years to come.
And I'd like to also get your reaction to the latest sort of tariff action we've had from Donald Trump. Obviously, he sort of began with aluminum and steel. This could obviously expand to other sort of divisions. What is the sort of impact do you think is going to be on Siemens? Yeah. And how is it affecting your strategy and how you're looking at this year?
So I think the biggest impact is any kind of trade restrictions. They ultimately result in higher inflation, first and foremost, before the reshuffling. So for Siemens, we are a global company, but with a very, very local footprint. I talked about the United States. I can say the same for India, for China. We have 30,000 people there. also local manufacturing in all places. So therefore, we would see an impact, but it's not that strong. It's more about how is it impacting the market in total, first and foremost. Second point comes, what happens is that since customers see higher tariffs, they reallocate their value added. So we believe that could be tailwind for Siemens, because if you want to build a new plant, Siemens is there. And if you want to build in an environment where we have less and less labor or high cost labor, you want to automate and digitalize this plant as much as you can. And if you look for an answer to that from technology perspective, you should come to Siemens. We are leading in automation, we are leading in industrial software, but also in industrial AI. We can provide answers to the questions how to ramp up a smaller lot size manufacturing, fully automated. We have very good examples also with our partners. Industrial Copilot is one, virtual PLC, where we are basically reshaping the way how you automate. So it's a lot of technology in the pipeline which we can help you.
And I'd like to also get your insight on what you're seeing in the Chinese market. Obviously, we've been talking about for years waiting for this recovery in China. Do you see any signs of that now, or do you think that this is going to be some more sort of stagnation for this year, 2025?
So we do see a sign there. We see electronic semiconductors coming up. Chemical industry, which is a leading industry, shows momentum there. Also, actually, in particular in China, automotive industry, where in other places is not. So therefore, and the government is taking actions. They want to bring the confidence of the people back. They triggered some actions in order to really get life again into the construction sector. Again, this boosts also confidence. And I believe the whole story about DeepSeek is also putting a little of self-confidence into people's minds. So therefore, demand will come back. Government is taking actions. It's not a kickstart, I would not say that, but we see that this economy is picking up momentum, in particular in the space where we are, which is the investment space.
So that was the Siemens CEO, Roland Busch, speaking to Oliver Crook. Shares up 12% year to date, so we'll keep an eye on that stock at the open. Meanwhile, at 7 o'clock London time, we're going to get the latest UK GDP numbers. Economists are expecting a 0.1% drop after a stagnant third quarter. But this is crucial because it could put the UK back on the brink of recession. And remember, the Bank of England already last week downgraded its growth forecasts for the UK. You can see that here. Our reporters also got their hands on a copy of the Office for Budget Responsibility's first draft of its updated growth outlook. Another downgrade there. All of which is bad news for Rachel Reeves because, of course, she has just announced this raft of measures to boost growth. They're not going to materialise for decades, it looks like. Growth, the government's top priority. Part of what economists reckon weighed on growth was her gloomy messaging after the election last year. And most importantly, weak growth, of course, impacts her headroom. And if she runs out of that, she's going to have to cut spending, given she's ruled out more tax rises or breaking her fiscal rules. But we've got plenty more coming up on the programme. We're going to get back to the geopolitics. Trump setting his sights on stopping the war in Ukraine. We'll get you the details next. Stay with us. This is Bloomberg. A very good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian stocks and the euro gain after Presidents Trump and Putin agree talks to end the war in Ukraine. Sources tell us European officials were not warned about the phone call. Jay Powell warns Congress there's still more work to do to bring down US inflation after core consumer prices saw the biggest monthly increase since March. We'll bring you the jobs and PPI data later on today. Plus, Japanese media report Honda and Nissan are to scrap tie-up talks as both car makers report their results. We'll bring you earnings from Europe, including Nestle. Well, a very good morning. Welcome to an extremely busy Thursday, both in terms of earnings and geopolitics. Checking in on these markets, and we've got futures pointing higher on both sides of the Atlantic on these expectations of an end to the war in Ukraine off the back of the US-Russia talks. Asian markets looking past that hotter than expected US CPI print as traders focus on the prospect of peace, but also momentum in China tech. We'll get into that in just a moment, but flipping over to the cross-asset picture, the dollar's really been on a roller coaster ride off the back of the CPI print because of these bets of higher rates for longer. But it paired gains yesterday afternoon, and now you've got euro dollar there at 104, up 0.5% as well because of the prospect of peace. But we've got the pound there at 124. Again, looking ahead to UK GDP at the top of the hour. Treasury yields at 4.6% on the 10-year, and oil down at $74 a barrel, down 0.8% because maybe the prospect of peace could ease some of these supply concerns. So no shortage of catalysts this morning. But let's get into the Alibaba moves as well, because you are looking at that individual stock currently higher 6.9%. Now that's paired some of its earlier gains. It was up 9.1% in Hong Kong at its highest since 2022. But if we put it into context, it's up 57% from the January trough, but still down 59% from the 2021 peak. So this frenzy over Chinese artificial intelligence, turning it into a bit of an investor favorite again, really putting a bit of life into the e-commerce giant, having pretty much sunk into obscurity after this years-long regulatory crackdown. So a surprise reversal of fortunes for Alibaba, which had kind of fallen out of favour, hadn't it, given Beijing's clampdown on the tech behemoths in that country. We also, in Asia, have breaking earnings from Honda. Of course, this morning we have had a report that Honda and Nissan's boards have approved ending the merger talks. So that's somewhat overshadowing these numbers this morning. We have the news of their earnings expecting this morning. Operating income coming in at 397.3 billion yen. The estimate was for 406.9 billion yen. So a miss on operating income. We are expecting the CEO to hold a briefing on that integration that has been put off the table for now. Officially, Nissan calling off the talks to combine, but continuing talks on strategic partnership. So that the latest on Hong Kong. Of course, it also faces the Trump tariff threat. Both Nissan and Honda have extensive manufacturing operations in Mexico. The share's down 8.5% year to date. But let's get back to the geopolitics now. President Trump saying that he has agreed in a phone call with the Russian leader Vladimir Putin to start negotiating an end to the war in Ukraine. It reverses 3 years of US policy on the conflict, with European officials getting no advance warning of that call. Trump says meetings with the Russian president are now being planned.
I'll be dealing with President Putin largely on the phone, and we ultimately expect to meet. In fact, we expect that he'll come here and I'll go there, and we're going to meet also probably in Saudi Arabia. The first time we'll meet in Saudi Arabia, see if we can get something done. But we want to end that war. That war is a disaster.
For more, let's bring in Bloomberg's Oliver Crook out of Munich. And Ollie, it seems like an absolutely fundamental moment that Trump has spoken to Putin before Zelensky. But what do we know about what they said on that call?
Yeah, absolutely. I mean, the president, Donald Trump, is really sort of trying to move very, very fast with a number of things. So there's obviously this call with Vladimir Putin, the president of Russia, again, breaking with precedent of the last several years of the Ukraine conflict, from U.S. policy, of European policy, and basically just wanting to get things moving. And we knew this was going to a certain degree be Trump's approach, much more pragmatic approach. But what's interesting is it's going at the same time as Pete Hegseth, the U.S. Defense Secretary, is here in Europe. You also had Scott Bessent, the Treasury Secretary over in Ukraine. Ukraine to discuss with Zelensky potentially economic cooperation going forward. So all of these things happening at once. And for Scott Besson in Ukraine, basically what the Trump administration does is leaving the door open to continue to support Ukraine if they need to, maybe even ramping it up if Putin doesn't come to the negotiating table. But they want to get paid back. So how they're going to get paid back? Potentially in the sort of mineral deposits with Ukraine and sort of opening up the sort of economic ties. From the defense side of things, and this was in Brussels with the U.S. Defense Secretary Pete Hegseth speaking yesterday, we don't yet have the Trump plan in terms of what he wants to see the peace plan in Ukraine look like, but we began to get some of the contours from the Defense Secretary of the United States. Have a listen to what he had to say yesterday.
The United States does not believe that NATO membership for Ukraine is a realistic outcome of a negotiated settlement. Instead, any security guarantee must be backed by capable European and non-European troops. As part of any security guarantee, there will not be U.S. troops deployed to Ukraine.
So that you got very sort of clearly from the U.S. Defense Secretary, no U.S. troops to sort of be in there as a defense-keeping force. He really wants the burden to shift from the United States to the Europeans in the sort of long-term security of Ukraine. But again, he kept saying the word realistic. What is realistic? What is not realistic? This is an administration that is moving away from the sort of principles, I think, that were guiding the Biden administration into the pragmatics of just trying to get it done.
Yeah, an absolute about-face from Biden to Trump policy on Ukraine. But how is it being seen in Europe? Is it seen as a capitulation to Putin, perhaps?
I mean, that's one of the great concerns, right? And I think that what we keep hearing from the sort of Europeans, and we've heard from the beginning of the war from the Biden administration, is basically no decision about Ukraine without Ukraine, right? That has been the sort of the conversation throughout. Now we understand that Trump basically sees this as a negotiation between himself and Vladimir Putin. But the other point is that, you know, no decision about Ukraine without Ukraine, perhaps, but there's increasingly seems like there's going to be decisions about Ukraine without the Europeans. I mean, they're getting all of this information as fast as, you know, sort of we are, it seems. They're not getting briefed on these calls with Putin. They're not getting sort of in the room. So what will be absolutely crucial here in Munich, which is why we're here, is the Munich Security Conference. This is where we're going to actually have really the first high-level meetings between the Europeans and the new Trump administration. We have J.D. Vance here. We have Marco Rubio, the Secretary of State. We have Keith Kellogg, the Special Envoy for Ukraine and Russia. The question is going to be, how much input are the Europeans going to get in this sort of situation? Or are they just going to be told basically what Trump is thinking and they need to acquiesce? And it's sort of very awkward because it's not only that, you know, the United States may be acting unilaterally, they're also going to be expecting a lot from the Europeans in terms of security guarantees, paying for the security of Ukraine, and potentially, you know, peacekeeping forces within Ukraine. We're talking about potentially European troops within Ukraine after a ceasefire deal in order to preserve the peace there. That is something that is going to be very difficult to sell on a national level. I've spoken to senior lawmakers in Germany about this, and they're sort of very reluctant to commit to anything that looks anything like that.
OK, Bloomberg's Oliver Crook bringing all of the threads together for us from Munich ahead of the Munich Security Conference. We thank you. Now, let's get back to the earnings story here in Europe. Michelin saying that difficult conditions for the tyre maker and the tyre market are going to continue in the coming months because of the downturn for the autos industry. This after Europe's biggest tyre manufacturer reported sales volumes down 5.1% in the year 2024. I'm pleased to say that I can speak now to Michelin's CFO, Yves Chapot, who joins me from Paris. A very good morning to you, Yves. Just take me through these results that you have reported.
Good morning, Lizzie. Thank you for having me. Despite the conditions that you described very well, Michelin posted very strong, very robust results. That shows that our overall revenue went down, but we have been able to stabilize our operating margin at 12.6% at constant exchange rates, and we record the second largest free cash flow in the group history, above 2.2 billion euro. So that's given the conditions, the volatility of the market, the inflows of Asian tires, in anticipation of regulation change or tariffs, it's a remarkable performance.
Well, yeah, I know you've got plants in Mexico and Canada. So how are Trump's tariffs affecting you?
So for the time being, there is no tariff between US, Mexico, and Canada. Michelin employed 20,000 employees in the US. We have 35 factories, of which 20 produce tires. And roughly 70% of the tires that we are selling in USA are produced in USA. On top of that, we have some factories in the USA producing, for example, mining tires that are exported all over the world. So our US operations are, of course, integrated with our Canadian and Mexican operations. We just have 2 factories in Mexico and 3 in Canada. Our largest operations by far in North America are in the US.
Yeah, I mean, your CEO's talked about investing more in the US, possibly at the expense of the European sites, to counter these tariff threats. Can you give us more detail on that strategy and what you're planning to do there?
No, our CEO did not say that it will be at the expense of European investments. What he said is that it's given the competitivity challenge that we are facing in Europe, energy cost, labor cost, overall, let's say, business taxation environment, plus a lot of norms, it's difficult to export from Europe. And in US, we have, as I said, we have very large operations. We are constantly investing to renew our tools in North America. And what Florent was saying is that maybe we'll have to prioritize some project in the US versus Mexico or Canada, but not at the expense of European operations.
But so difficult to export from Europe, but within Europe, what's the demand outlook for EVs looking like?
So the market, the EV market last year was stable, was stalling in Europe. In the overall passenger car market for original equipment that dropped by 7% over the year. And that's true that we have been experimenting in Europe tough market conditions, where at the same time all original equipment segments were down. And particularly at the expense in automotive of electric vehicles, mostly because of the cost of electric vehicles first, but as well because consumers sometimes are a bit lost about what kind of power engine they should buy, which trigger these difficulties. On top of that, some countries have moved back and forth regarding the incentive for electric vehicles.
Yves, really good to talk to you this morning. Yves Chapot, CFO of Michelin, we thank you. Coming up on the programme, Wall Street banks are planning to expand their crypto offerings amid Trump's embrace of the industry. We're going to speak to the managing partner from venture capital firm Stillmark. So do stay with us for that conversation. It's coming up next. This is Bloomberg.
The stablecoin market would benefit from a U.S. regulatory and supervisory framework that addresses stablecoin risk directly, fully, and narrowly. This framework should allow both non-banks and banks to issue regulated stablecoins and should consider the effects of regulation on the payments landscape.
Federal Reserve Governor Christopher Waller speaking there, and some of Wall Street's biggest banks are planning to ramp up their involvement in the crypto industry. This as banks are betting that the Trump administration's pro-crypto policy will lead to a wave of IPOs, share sales and convertible bonds. Well, we can talk now about all of this with Alyse, Killeen, who is managing partner at Bitcoin-focused venture capital firm Stillmark. Really good to have you back, Alyse, on Daybreak Europe. You heard those comments from Waller there. Stable coins have the potential, he says, to maintain and expand the international role of the dollar. What do you make of them?
I think that's absolutely correct. And the year has started with significant announcements for stablecoin activity in the crypto sphere, with Tether announcing on January 30th that they plan to launch USDT on Bitcoin and on Lightning. That, of course, is possible via the Taproot Assets protocol. developed by Stillmark portfolio company Lightning Labs with contributions from the broader open source developer community. And the protocol itself was made possible by a recent upgrade to Bitcoin protocol Taproot.
And just as we've seen this kind of about face from the Trump administration, from the Biden administrations on Ukraine policy, as we were discussing earlier, you're also seeing the Trump administration embracing crypto in a way that you might say the Biden administration did not. We're still, though, Alyse, waiting for more clarity on regulation. What would you like to see? What would be the most beneficial?
Regulatory clarity is certainly overdue in the Bitcoin field. And of course, the integrity of regulatory bodies is also important. It's stability that benefits Bitcoin startups. And as startups are correlated with Bitcoin's price and that startups drive adoption, expand Bitcoin's utility, regulatory stability is also important for Bitcoin. As I said, Bitcoin begins the year with incredible momentum. There's several forces behind that. So the transition of Tether from crypto protocols like Tron, Solana, and Ethereum, soon to come to Bitcoin and Bitcoin's Lightning Network, is significant for Bitcoin because of the incredible activity that Tether and stablecoins have seen on other protocols. In 2024, 400 million users worldwide used Tether to transact over 10 trillion in volume across chains that are frankly less efficient than what's provided by Bitcoin and Bitcoin's Lightning Network. And so for those new users coming to Bitcoin and Bitcoin's Lightning Network to access stablecoins to transact, what they will benefit in this integration is instant settlement time and much lower transaction fees. So where fees have been ranging recently between 4 cents and over $10, with fees spiking much higher than that based on activity. With Lightning, what users will find is instant settlement at a fraction of a cent, and that's consistent even as activity scales. Now, for Tether, the benefit of
I just wanted to say, given, the uncertainty about regulation, you are seeing, and we're showing it here, a bit of a lackluster run for Bitcoin over the past week or so. We're not at the $100,000 mark where we were previously. What do you think will get it past that again?
Well, that's exactly right. And I think that reflects the importance of the broader economy for Bitcoin. And so as we've seen instability in the economy, questions around general global stability and the sort of position of regulatory bodies in, within the United States, that uncertainty translates and affects Bitcoin. It translates to Bitcoin. Of course, Bitcoin's price is significantly up over the past 12 months. And so even though we've seen some instability and uncertainty that's affected the economy as a whole and Bitcoin itself, Bitcoin's performance has been incredibly strong. The ramifications of regulatory clarity are not just important for Bitcoin's price, but also for the adoption of Bitcoin. One of the areas that we've seen that emerge is an enterprise adoption for Bitcoin in the Treasury.
Yeah. Alyse, Killeen, managing partner at Stillmark. Always good to talk to you. We thank you. And we'll get back to that macro picture in just a moment. So do stay with us. This is Bloomberg.
Its base reasoning is very good. In fact, even without fine-tuning, Grok 3, the base model, is better than Grok 2. So we're really in the final stages of polishing Grok 3. Probably it gets released in about a week or two, so pretty soon. I think the evidence is there in that OpenAI has gotten this far while having at least a sort of dual profit, non-profit role. what they're trying to do now is completely delete the nonprofit. And that seems really going too far.
So that was the Tesla CEO Elon Musk there discussing OpenAI in a conversation at the World Government Summit in Dubai. Bloomberg's Jemana Basecci joins us now in Dubai with more. Jemana, what else did Elon Musk have to say?
Yeah, well, it was one of the signature panels this year at the World Government Summit on day 3, no less. A conversation between Elon Musk, who dialed in virtually to the summit, and the UAE AI minister that was Amr al-Alama. And they spoke about a whole bunch of things, including Doge, what Elon Musk's plan is with the reduction of the size of some of these U.S. agencies. And he actually said, we need to delete entire agencies, and many of them. So again, reiterating what he's been saying the last couple of weeks, and that the size of the U.S. government needs to be shrunk. But then some comments about OpenAI as well. Now, Alama didn't ask him directly about the bid that the Musk consortium put in for OpenAI, but what he did say, what Musk said, is that OpenAI has shifted away from its origins. It started as a nonprofit, an open source model. It's moved away from that, and he would like to see it return back to what it was, but didn't actually touch on the fact that he put in a bid for it. And of course, our very own Tom McKenzie spoke to Sam Altman the other day. They outright rejected any bid from Elon Musk and said that it was coming from a place of insecurity. They didn't actually touch on that on the panel, but very interesting to hear from Elon Musk at the World Government Summit. He also made a big announcement. They're opening up a Dubai loop for transport systems over here in the UAE.
Yeah. Bloomberg's Jemana Basecci with a roundup of what Elon Musk had to say in Dubai. The opening trade's coming up next with Guy, Critty and Anna taking you all the way to the open. This is Bloomberg.